This is our man, Mr. Steve Rhodes and Tom O'Brien. We got a special show for you out here today. Dow is up 14 right now. Nasdaq's down 5. S&Ps are off a couple bucks. You get gold flat out here. Silver is down 45 cents, 35.24. Bonds are up 12. Steve Rhodes, what's going on, man?
Not much. How you doing?
I'm doing great, man.
This is good.
Is it?
Yeah,
totally, man.
Inaugural kickoff.
And folks, you know what we've done here? So we have 4 radio studios now, and we have 2 TV studios. So we're going to be building this little baby out, and we're going to have, you know, keep moving on.
Have some fun.
Big time. Market-wise out here, you know, this has been a heck of a trader's market, hasn't it?
Oh, absolutely. Especially, I don't know what time you got up this morning. I woke up at 4.
Yes.
I think when I went to sleep, the Dow was down about 55 points, something like that.
Right.
I woke up around 11:30 or so. It was about 82 points.
Right.
I woke up at 4 a.m. It was down 155.
Exactly.
You know, so let me turn on Asia's Squawk Box, see what's going on out there.
No, totally.
You know.
And what you had, folks, is this, okay? If you take a look at the S&Ps, okay, the bottom line, you know, the futures, we get down to 12.95. When it was at that level, it was basically the European Central Bank that was coming in, and they were basically bailing out Italy again.
Yeah, I mean,
well, not again, but that they stopped buying those bonds.
Exactly. You know? Well, at that stage they hadn't. But
that's right.
But
that's
you had
right.
the euro, I think, traded down to about 138.50, somewhere in that range. And so, you know, there was some type of intervention.
Yeah, big time.
You know, yeah, absolutely.
And you know, it's wild, folks. Okay, so check it out. We have option expiration coming in this Friday, right?
Yeah.
It's the perfect deviant move, right? That you come down hard, you come down, you know, 3 days in a row, you bounce up into option expiration, right?
Yeah.
It gives it up again. So we're on a Tuesday now. You got option expiration Friday.
Yeah.
It's going to be interesting. And what you have here is that if we actually go over and you take a look at the DAX, what you have with the DAX got to a low today of 57.93. It's at 58.73 right now. Bottom line, that little baby looks to me like it wants to bounce also. But huge trading range and huge consolidation.
Oh, no, absolutely, yeah. I was going to try to pull up the DAX, but I for some reason I ran into a problem with that. But
so let's talk about first off, your newsletter, right?
Yeah.
Okay. Now, the probability-wise, right? You hit. Well, let's talk about the last full moon. Right?
Okay. Yeah. Absolutely. So the last full moon, everybody that you know is listening, has been listening. We had a full moon that came in on July the 1st, and we had the market really move up strong into that. And on July 1st, you know, I've kind of got my cursor. If you're watching this live, I've got my cursor on that candle now. On the full moon, or on the new moon, I apologize, new moon, solar eclipse, what we wanted to do was we wanted to sell that.
Okay.
And so, you know, if we're selling, we want to sell at highs.
Yes.
Right? Buy at lows. That's what everybody talks about.
Because now, when you're doing that, too, you want both of them to line up.
You do.
Yeah, okay.
You'd like to have price, you know, line up with time. Because we're using any of these aspects, any of these astro aspects, as nothing more than an indicator. We're not doing any crazy astrology, or we're just simply saying this is an indicator. It's an indicator that's really not on any charting system.
We're already crazy enough.
We are, absolutely. I mean, the lunar stuff is out there.
Right,
you know, you can pretty much pull it up on any chart.
Right.
But, you know, there's plenty of other aspects out there that have an impact on the markets, commodity markets, you know, the indexes or what have you. But with regard to the July 1st, with regard to the July 1st day, we had a real strong move up, big candle, you know, good volume, and really everything that we wanted, with the exception that price had extended. Because if we went back either to the swing point, Tom, going back to the June 1st time frame, you know, we took a look at the retracement. It retraced more than to the 0.786.
Yes.
You know, so I was looking at 1327 as being the original target area, and I remember getting so many emails from folks saying around the I don't know, the 27, 28. Do you really think that the S&P can move that many points?
Oh,
you know, coming into it, right?
Well, you know what's amazing? And folks, I was doing the Master Trader series, right? And we were doing that series, and this is when we were down at the 1262 area.
Yeah.
And that's exactly what the guys were saying in there, saying, you know, I want to go long, and I did go long.
Right.
Okay.
Right.
And of course, the world was shocked when I went long.
Right.
But bottom line is that, you know, can you move that many points? I says, I don't know. I just know that this is the place to go long.
Yeah,
I mean, that's the bottom line.
Absolutely. And if you go back to any of my archive shows, or probably even the webcast that the folks can pick up, the Celestial Charting webcast that the folks can pick up on Channel 5, I believe.
On Target TV.
Archive.
Okay.
They'll probably see the 1327 area was the spot that we were looking at. And the reason was because that was a retracement from the May 2nd high all the way down to the low on the S&P that was made on the 16th.
Right.
And so we had that was the .618 came in at 1327.60. And the .786 of the June 1st move down, that last solar eclipse down, came right in at 1326.55. So it was really ideal. And that morning, so on Thursday, you know, the S&P had closed at the S&P closed on Thursday at about 1320.64.
Right.
And what was really cool was we had everything coming together at the same time. And you know, and what I did was I gave folks a entry point on the SDS at 2020. Now, when you looked at the chart Friday morning, you know, when they got the newsletter,
yes,
everybody had to say to themselves, can it really get down that low? And I said, you know, what I did was I gave a range because, you know, we're not going to pick the bottom tick. We don't really spend time trying to pick the bottom tick or the top tick. We're out here to, that's right. That's exactly right.
Yeah, you want the meat.
We want the meat. You know, we don't want the bread.
Right.
You know,
that's right.
Well, we want the bread, but
I don't want the bread.
Yeah, not the bun.
No,
yeah.
no.
And
we'll take the cash.
That's right. Exactly.
No grains.
Exactly.
Nico will go after us.
Yeah, exactly. So, you know, the one thing, even though it retraced higher,
right?
You know what? It still made sense to take the trade. The probability was on our side, based on the fact that we had a 70% win rate. You know, based on when you took a look at the math. And what was really great about this trade here was the stop technique that I've used has kept me in these trades longer. Even if it failed, it still gave it more room. You know, and sometimes what folks end up doing is spending too much time and create too tight of a stop.
Right.
You know, you spend all the time putting together the trade.
Yes.
You're so focused on the entry. But, you know, what I do on Mastering Probability, what I do during my webcast and so forth, is I really help people focus on the money management aspect of it. Because this is a money game.
It is.
What you and I are doing each day, folks, this is a money game. And if you can treat it like a game, you know, people spend a lot of time on their phones playing solitaire and hearts and
right,
and they feel like you're good at the game. All you got to do is get good at this game. But one of the keys is the money management piece of it. You know, and so what I've got people doing is just taking 1% of their trading capital, identifying their risk. But the bottom line was, even though we had a failure, the failure came in on July 7th.
Okay.
So that was, I'm not even sure where I'm at on dates, but July 7th, whenever that was, last week. And we had a failure. Now, what's really cool about that failure, and I'm going to point it out for my subscribers to the Celestial Charting webcast that I do every other week, is there was a aspect, there was a Venus, Uranus aspect that the market moved right up into. In fact, it moved up into there. And during my webcast tomorrow, we're going to take a look at those aspects and how they can be used as timing tools. And it's incredible, the results. You know, I sent you the email over the weekend. And Larry and I were going back and forth on Sunday. And I know Larry is listening in. He was sending me emails at 4 or 5 this morning. And, you know, and so that's another great indicator.
No, it's huge because, you know, actually when you came in my office a couple weeks ago and showed me the first ones, I says, oh, this gets interesting.
Yeah. So what was cool was when I took a look at the stop that we put in on the SDS trade, even though the lunar pattern failed, our trading strategy still was in effect.
Right.
Because the stop that we used was wide enough, still gave us the reward to risk. And, you know, and what was really nice was that we didn't get stopped out as we came into that Venus-Uranus aspect. On July 7th, which was really cool.
And folks, one of the main, so you can picture how the trade was set up, but what's important to understand is this. Those swing points are crucial, so you can hide behind them. You
exactly.
have huge trading range. So your reward basis is a huge amount, and you know that, okay, you don't know where it's going.
Right.
But what you do know is speculate, you say, okay, listen, man, but once it goes south, it's a good south, or good north if you're going long, versus putting your stop on the other side of those swing points. And
that's exactly right. I mean, that's the real key is that, you know, what I showed folks was a tool. I got the wrong thing up here. was I showed the tool for how we calculated stops.
Okay.
And going into from the money management standpoint. And when we were placing the stop, I even adjusted it a little bit because we had swing points on the left-hand side of the chart that we were going against.
Right.
So, I said,
Which
okay,
is sweet.
we're going to, yeah, exactly, because we had another area where our back was up against the wall, where it's going to be a release point. Because that's what we're really using these aspects, these lunar aspects, or any other aspects as release points. I'll use them as swing points.
Right.
It's not necessarily it's a swing point that's going to be made right then and there.
So what is
it's a swing point in the making.
What does your wife think when you're out in the backyard howling at night?
It's great. It's great.
I'll tell you. This is a true story, folks. Okay, when even just growing up in general, right? My kids.
Yeah.
I always had them howling out the car. I'm not kidding.
Yeah.
I'm absolutely not kidding. Okay. So picture this, you're starting the newsletter, right?
Yeah.
And we're down the beach, and we're coming out of a restaurant, and we had a couple of them with us, right? And I start howling. I said, come on, let's go. We're going to howl at that movie.
Yeah.
Ian just looked at me saying, oh, man, I don't believe this.
It's great.
Folks, you got to look up at the stars. That's the bottom line. That's just living, too. But that's
well, actually, the stars are, one of the things that I want to be able to do, in life. And I enjoy spending time in Hawaii. My favorite place.
Oh yeah, your rock. I know. I know his rock. I got his rock. That's right. That's when I first met you. You showed me that rock, man.
That's right.
That picture of that rock.
That's right. I did.
That's right.
I did. And what's really cool about Hawaii is that it's so dark there. In fact, on the Big Island, all of the exterior lights for any of the streets, roads, any of the buildings that might have some type of street signage.
Okay.
It's either a special light or it's a special cover, so that in the evening time it doesn't impact your ability to look at the stars. Now,
isn't that cool?
Yeah. Now, on the Big Island, most of the countries have telescopes up there, right up at the top, so you're able to, take a look at, go into the solar system, what have you.
Right.
So I checked it out a couple times. I think you've got to have some connections in order to be able to get up there, to get in, and because it's right up at the top of Mauna Kea or Mauna Loa.
Well, you're going to be up there writing your newsletter.
That's right. Absolutely.
That's going to happen.
Absolutely.
That's going to happen. Folks, you stay right there. And, folks, we'll take your calls. 877-927-6648. Steve Rhodes, Tom O'Brien. We get the Dow up 3, NASDAQ down 6, S&P's a flat. You get the gold contract up $1.50. Silver's down 33 cents. Bonds down up 8 ticks. We'll talk about bonds. If you want to go short bonds, folks, go short right here. These are you get a good little trade here.
Good. Cool.
It's a beautiful thing.
Cool, man.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Purchase Tiger Dollars during the month of July, and you will be automatically registered to attend Tom O'Brien's one-day live webinar. 5 primary core techniques to become a master trader, and no additional charge. Your purchase of Tiger Dollars is the only way to gain access to this exclusive webinar. The one-day webinar will be held Monday, August 8th, from 8 a.m. till 3 p.m. The course will also be archived on your members page for you to view at your convenience. Go to the front page of TFNN.com under Breaking News and order your Tiger Dollars now.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit tfnn.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
Is brought to you by Vista Gold. For more information, just click the Vista Gold banner on the front page of TFNN.com.
Welcome back, folks. Our phone number is 877-927-6648. Give us a call, folks.
Yeah, who's going to be our first caller?
That's right. That's right.
We've got to have an inaugural caller. Come on.
Totally. No doubt. And listen, folks, as you're coming over to TFNN on Channel 5 at TFNN, if you want to go over the celestial charting that Steve and I were just talking about, you can get it right there on Channel 5. And can you just walk us through what they're going to be looking at there, the celestial charting?
Yeah, during that webcast, it's as long as a 1 hour webcast. Could be 30 minutes to 60 minutes.
It's 36 minutes, I think.
Oh, the webcast on Channel 5. Yeah,
right.
on that, what they're going to actually see is they're going to see the actual trading system. They're going to see the actual lunar chart.
Okay.
How to be able to understand it, because when you start taking a look at these lunar aspects as also what I call these information release points, just like a swing point,
right?
That they're just as powerful when they fail.
Yeah.
And what's really cool about trading is when you can learn how to fail successfully.
Oh yeah, big time. Big time. The failure is one of the best ones, actually.
In fact, that's what we're looking for, right?
Right.
When we're taking a look at these swing points, we're looking for failures.
Right.
And
because it gives more information, folks. That's the reality,
Yeah.
Right.
And like if you take a look at the we had the market on July 7th move against us.
Yes.
Okay. Move against us from the standpoint of the lunar aspect.
Right.
But when it came to the SDS trade, our stop was below the swing point that went back to May 2nd. Right. There was enough room in there. There was the right reward to risk for us to take.
Yes.
Now, what was really cool about July when was it? It was on Friday. Was July the 8th? Was the mere fact that on the SDS, we had this island reversal.
Yes.
Which is the same thing on obviously because it's the inverse of the SPY. And folks, we apologize you can't see my screen. We'll make sure that we have that fixed for the next time that we do that, because right now they're not seeing my screen, but we'll get that fixed. But if you take a look at your chart, what you'll see there. You'll see a candle pattern on July the 7th on the SDS, and it's an island, and it's a great reversal pattern. It's a great, and typically, and when I showed folks in my this week in my newsletter, I went back and took a look at Apple, because so many people are into Apple, and it's a big cult stock and so forth, and because it's such a powerful stock, the reason why I wanted to take a look at Apple was because that also had a island reversal pattern in there, where Apple started moving down. In fact, Apple made its high, I believe, at that island reversal. If we go ahead and we pull up that Apple chart at APL, if you go back and you got to go back to February 16th, and on February 16th, it made that island reversal candle.
Look at that.
Now, Apple's been trying to get back up there. And and it's tried. This is now really the second or third time, depending on how you want to take a look at it.
Yes.
But what's so important is to understand these candlestick formations. Now you don't see island reversals that often.
No, they're hard to do.
Yeah, you see it
and that was at 364, folks, and Apple made its way down to 315.
Yeah,
310.
And it made its way down. It made an ABCD extension. The first one ended up being a move of a move. On that first one, and that first leg down, went all the way back to the swing point from January 23rd, 24th time frame.
Big time.
So, it did what it was supposed to do, stopped there, went down there with volume. And even, in the newsletter that I sent out yesterday to my folks, said, thank you to you, because you're the one, that has coined that phrase or taught it to me. So now I'm teaching it to others, you know, and knowing that move of a move, knowing that you take a look at it.
Right.
And when you take a look at this island reversal that Apple made, and knowing that it made a move of a move all the way down, you know, that's what I fully expect we'll see on the SDS chart as well.
Right.
If that candle formation holds up. That doesn't mean we won't see retracement. That doesn't mean that the market, you know, may not, you know, we got a lot of volatility going on.
Oh, it's a beautiful thing, man.
Right?
Totally.
Yeah.
Let's go over that bond market.
Yeah.
Okay, so folks, if you look at bonds right now, so this is what we had with bonds. If we look at the 30-year right here, and folks, I did go short bonds, you know, this morning, okay? We were actually, what was just really cool is that, you know, if you get the market insights, you'll see we got shot at 127. We got it down to 122. We went long, and we closed it yesterday and went short again this morning. This is truly a trader's market. Now, this is what you have. We did 268,000 contracts thus far. Well, bottom line, folks, is that we went down with 481. It already failed the highs up here at the 127.01, which is saying, hey, baby, we're going back down to 122. Now, that correlation, and this is what you want to wrap your head around, it's all about the currencies. That correlation, baby, is that market wants to bounce. You go into option expiration 2 or 3 days, you flip the baby around again.
Yeah.
Beautiful thing.
Yeah.
Listen, folks, stay right there. I'm Aunt Steve Rhodes, Tom O'Brien. Our phone number is 877-927-6648, and we are on Channel 1 at TFNN on Tiger TV, folks.
Give us a call.
Hi, folks, this is Tom O'Brien. To help you celebrate your trading independence during the month of July, we are offering you a unique opportunity to get all of the TFNN outstanding products at a substantial discount and to receive access to an exclusive webinar that you can only get with this offer. If you purchase Tiger Dollars during July, you will automatically be registered to attend my live webinar at no extra charge. During this one-day webinar, you'll spend 5 hours in the TFNN virtual classroom learning the 5 primary fundamental core techniques to become a master trader. The live one-day webinar, 5 primary fundamental core techniques to become a master trader, will be held on Monday, August 8th from 10 a.m. to 3 p.m. If you're unable to attend the live webinar, the course will be archived on your members page for you to view at your convenience. Outstanding TFNN products at substantial discounts with a free webinar. Now that's a great way to celebrate your trading independence. Go to the Tiger store and purchase your Tiger Dollars now.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Now we have our winner, William Lorman from Wilmington, Mass. William, thank you so much. Congratulations.
Hi, Tom. Thank you very much.
It's a beautiful thing, man.
Oh, we've got Jason Spears. Congratulations. You are the winner of the Great Panther Silver Giveaway here at TFNN. I'm so pleased you called in. Made my day.
Well, thank you. Thank you very much.
Through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins.
Right now, we have our winner, Joe Picararo from Wakefield, Mass. Congratulations.
Oh, yeah. Hey, long-term fan. Listened a long time. So, yeah, big fan.
I know that voice, man. That's a beautiful thing. That's a beautiful thing, man.
Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
Purchase Tiger Dollars in the month of July. Order The Torch and receive access to Tom O'Brien's exclusive one-day live webinar. 5 primary core techniques to become a master trader.
Welcome back, folks. We have the Dow right now off 2, Nasdaq's off 5, S&P's are off 3. You get the gold contract up $1.80. We have, let's see, light sweet crude's down 22. We get the bonds up 7. Our phone number is 877-927-6648. And Steve, we get our first caller. It's Vicky from Texas. Hey, Vicky, what's going on?
Hi.
How you doing? Thanks for calling.
Yeah.
Welcome, Vicky. Thanks for being our inaugural caller.
Oh,
We're
yeah,
gonna put your name in twice for the Great Panther Silver giveaway. How about that?
That's great. Well, I was going to ask you about GBG.
Okay, let's take a look at it. You got GBG. This is Great Basin. It's a producer in South Africa as well as Nevada. The low's 167. The high's 332. Now, do you own this? You're looking to buy it? What are we doing here?
Looking to buy it. I owned it last year, and I sold it and don't know where to get in again.
Okay. I'd start scaling in right here. You're at 203, and what I mean by scale is this. This can come back down and test $1.80. Okay, you're at 203 right now.
Wouldn't that be a nice trade?
Yeah.
If it came right back to that high volume low.
Totally. And you know what you have on the upside here, Vicky, is 332.
Mm-hmm.
So on the upside, you get $1.32, and if it has volume at $1.32, it can take off a lot further than that. See, this equity here, folks. If you look at this equity, and you bring it back to 2005, 6, 7, it doesn't matter what you bring it back to, and you put it on a monthly, what you're going to see is a huge acceleration of volume. And I'll just give you, that had come down at, 10 million in 2008. It's going up with 49 million and 77
That's
million.
77 million. That's beautiful, huh?
And the rest of the equity, the rest of the gold equities, let's put it that way, are not reacting like that. And there's a reason behind it. The reason behind it is that they're taking so much out of the ground. Well, let's put it this way. They started taking so much out of the ground. So what you're going to have going forward is a mine that is just basically starting, and they basically have some good prices. So you can start scaling right here.
Start buying some now and then watch, and if it goes down, buy some more?
Well, what happened is this. Let's say that you're going to get 1,000 shares, right? The way you do it is that you can buy 300 at 330 here at 203. You buy 330 at $1.90. You buy 330 at $1.80. If you're doing your scale, do you have my new book by any chance?
No.
Okay. If you have the new book, folks, okay, I have a whole chapter on scaling. And what you want to do, you have to set up the scale, though, before you get in, because you're not doubling down or tripling down. What you're doing, if we pull up this chart and we look at this chart, the best buy on this chart is at the $1.80, okay? Because what that is, that's the, well, best would be $1.67.
Right,
really,
right. Yeah. That doesn't look likely.
Right. But, and where I'm going with that, folks, is that June 17th, that had a high volume, but that's not the highest volume, because if you go back, there's higher volume than that. Well, the high of that is $1.80. That should stop it in its tracks. There's 11.8 million there. So the scale would go that, okay, I like it here, because if it takes off, then I have a third of position. If it pulls back a little, then you got your back is against the wall at 184 from June 22nd, and then what you have is that the last place would be the $1.80, and then you're putting your stop under $1.67. So now what happens is this. So money management-wise, when we're talking money management, right?
Yeah.
You're in it your average would be $1.90. You're going for $3.58. At $1.90, and your stop is at under $3.67. So what you have there is you got 30 cents down below. You got $1.50 up above. That's 1 to 5. You're in good shape.
Mm-hmm.
Thanks, Vicki. Have a great one. Have a safe one.
Wait, Tom. One more.
No, stay right there then. Okay, just stay with us. It's a beautiful thing.
Okay.
Steve and I will be right back with you.
Absolutely. Absolutely.
Our phone number is 877-927-6648. And this afternoon, folks, this show will also be on from 2 to 3 Eastern Time. And you'll be able to get the whole deal. And then, of course, we're going to be on tomorrow morning at 10 a.m. also. We have the Dow up 5, NASDAQ down 2, S&P's up $1.50. We're going to be right back.
TFNN is proud to bring you the cutting edge of newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today. Click Investments and Newsletters and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we waited at was less than you guys said, so, you know, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Purchase Tiger Dollars during the month of July, and you will be automatically registered to attend Tom O'Brien's one-day live webinar, 5 primary core techniques to become a master trader at no additional charge. Your purchase of Tiger Dollars is the only way to gain access to this exclusive webinar. The one-day webinar will be held Monday, August 8th from 8 a.m. till 3 p.m. The course will also be archived on your members page for you to view at your convenience. Go to the front page of TFNN.com under Breaking News and order your Tiger Dollars now.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
Welcome back, folks. Our phone number is 877-927-6648. And folks, this will be on channel...
Channel 1? I don't know what channel.
We'll find out which channel for you. It's on... no, it's on channel 1. Yeah, it's going to be on channel 1. From 2 to 3. And don't forget, at 1 o'clock, we got our man, Mr. Don Kaufman.
Great show.
Right now, huge show. Yeah. You trade options, folks. I'm telling you, man, woman, go listen to that show because strategies are out there big time. You know, market-wise out here, what you have, folks, is that bottom line is that we're going to have a bounce. We'll see how it bounces into option expiration. But all this is doing is setting up another beautiful trade. And you know what's wild here? Listen. When you look at the S&P in general.
Yeah.
You know, coming right off those highs, folks, from the 130, 13 to 70, May 2nd, what you have there is, what is they? They're called, I should have known them, the candlesticks, the three.
Oh, Black Crows?
The three black,
They're Black Crows, yeah.
Now, what you have, folks, is this. If you remember on the way down, you have the three Black Crows, and they love being tested, and that's the test, and then off that high.
Yeah,
you know?
no, absolutely.
It's just amazing. So let's go back right now.
Do we have Vicky's just on the line?
We do. It's a beautiful thing. Okay, so what are we going to look at, Vicky?
AT&T.
Ma Bell. Oh, let's take a look at it. Ma Bell's a beautiful thing. Now, do you own Ma Bell right now?
Yes, I do. I bought it too high.
You bought it too high?
And so I don't know whether to wait till how far it's going to come down and whether I should buy some more to have the average.
Well, let me ask you something. Why did you buy it first?
Oh, I bought it because it paid a dividend, and I was watching it for several days, and it just kept going up, and so I bought it, and then it started going down.
Now, if you buy an equity for dividend, right, you have to expect that that's going to be in a range, number one, but that's different than buying it for a trade. You know, it pays a 5.5% dividend. You know, you're at $30. I mean, you know, this can go back to $27 in a heartbeat. When you were buying it for a dividend, if it went to $27, would that flip you out?
No, I'd still be down.
Well, you can't be down that much, right? How much are you down?
Did you buy it back in September of 2010 or so?
No, I bought it at $31.68.
$31.68. Okay, so you're down $1.
Yes.
But you're buying it for a dividend that you're going to get 5%. What's $1? So you really were buying it for a trade then, right?
Yeah, I thought it was going up. But is it going to come a lot down from where it is?
This is what you want to do. Yeah, okay, so what you have here with Ma Bell, folks, is this. Is that the low is 24, the high is 31. You know, they print money, but the reality is that we're in a market right now that wants to pull back. So this little baby can pull back to $29.91 on a heartbeat. I mean, it can actually get down to $28.89.
It can. It's got some decent support in the 30.51 area, maybe a little bit lower than that. 30. You know, some couple high volume bars right out there, and it's trading. It's really trading in that range right now. So right now it looks like, you know, the battle that's going on is right between the 30.85 and the 30.51 level, and that's just looking at March 31st. And what it's done, Vicki, it's made a retracement. It's made a Fibonacci retracement of 0.786 right now. And so, you know, what it looks like it at least wants to do is go test that low of 30.44 from June 24th. But right now, we're an hour and some minutes into the trading session, only 4 million shares. Going into that June 24th candle had 20 million shares. So volume, you know, isn't there to push it down. You might even see a rejection of price today, especially if this market decides to go ahead and bounce. You know, and right now where it's really at is with all the markets being down worldwide.
Right.
It's really right now the battle is right here in the U.S.
Yeah.
You know, so it's up to the U.S. to if we close lower here, you know, the contagion is just going to continue on. You know, into that Hang Seng and you know, what did the Hang Seng finish out this morning?
Is it good just to hang in there or to get out of that?
Well, what was your trading plan? Come on, you got to have a trading plan.
Oh, no, I didn't have a plan when I bought this one.
When you bought this one? Did you have a plan when you bought any others? Oh, we got you on that one.
I'm just learning.
Okay. Listen. Okay, so this is lay this plan out. Put a stop under. Put a stop like at 30.04 or something. Okay, $30.04, right? And what I suggest you do, I think you're going to get some kind of a spike out of this, and you'll probably get the 31.50 back, and just take it, okay? Because the buy on this is lower. You know, see what it did. It had finished an ABC up. If you bring this back a little, it finished an ABC up at 32, and that was a longer term ABC up. You know, and when they finished it, we hit 31.94. 32 is the ABC up. The week of let's see, with that big spike up. That week right there. The week of April 1st, it took out the B point, took it out with volume, and then you get a consolidation. But don't let it get lower because you bought that for a trade versus a
long-term dividend hold. A dividend. Absolutely.
Okay.
Have a great one. Have a safe one.
Okay, thank you.
You're welcome. You know what's interesting here is that dividends versus trading.
Yeah.
And, you know, when you have an equity that is paying 5.5%.
Yeah.
As long as you can hold these folks, and you're going to take, and I'd say in a dividend stock, you're going to take 20% volatility.
Absolutely. That's right.
And that's not the end of the world. I mean, it's a different trade.
It is.
It really is. You start getting 5.5% compounded.
Yeah.
Now, I'm talking as an investor, flat out, okay?
Absolutely.
And don't go broke on these things. But the reality is that 5.5% compounded is big, big money in this market.
Yeah. So if you were playing a dividend stock, ETF, or what have you like that, you know, would you still go ahead and put in a trailing stop of about 20% or 15%?
Yeah, I would.
You know?
On my bell, the way that trade would look to me is that, you know, you wouldn't let it close under 28.89. The reason I'm saying the 28.89, I wouldn't even let it go to the bottom of the swing.
Yeah.
Because if it does,
yeah,
then it's like, okay, we're gonna get a vicious downdraft, and it can go quite a bit way.
Yeah.
And at 28.95, that's not bad. That's so, you know, you're taking 10% down.
No, okay. Absolutely. You know, and so many folks have got their pension and profit sharing plans and so forth being managed by, you know, outside entities.
Right.
You know.
Right.
And what most people need to know is the majority of these guys, you know, are not using any kind of stops at all.
Right.
You know,
right.
so your money is just running free.
That's serious business.
Right. Real serious. Right. You know, but to use, you know, a large volatility, right, you know, like a 15% stop, a 20% stop,
right,
usually is going to probably take you at least down to about the 200-day moving average.
Right.
You know, in there. At least you've got some protection.
And the way that I got that, folks, just so you understand how I got that, what I got there is that I said, okay, I got a $30 stock. I'm getting paid 5.5%.
Yeah.
Okay. 20 is not a lot. Compounded, because if you buy a dividend stock, you're not buying a dividend stock for a year either.
That's right.
What I mean?
That's right.
You're buying a dividend stock saying, hey, I'm going to hold this for a while. And in Ma Bell's case, you know, they make money hand over fist.
Absolutely. But if you got a stock like that and you've got a 15% pullback, there's a problem.
Yeah.
You know, and so
right.
protect your cash.
That's right. Listen, folks, don't forget, for the month of July, if you buy Tiger Dollars, I'm going to be doing a workshop on August 8th.
Great workshop.
5 hours, okay? Bottom line, live workshop. If you can't make it live, be on your page. And it's free. And you only can get it by buying Tiger Dollars in July. Now, the Tiger Dollars are good for all service at TFNN. You get Steve's newsletter, Bud, Basil, David, Ken Shreve. Bottom line, growling and prowling. This is Steve Rhodes. This is Tom O'Brien. You stay right there, folks. We're going to be coming right back.
Looking for some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a technology insider today.
You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit TFNN.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs.
This segment is brought to you by South American Silver Corporation. For more information, just click the South American Silver Corporation banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow right now down 24, Nasdaq off 13, S&Ps are off 6. You get the gold up 1. Let's go to Alex in New Jersey. Hey, Alex, what's going on, brother?
Good morning to you.
How you doing, man?
I'm not going to complain.
Good.
I'm taking a look at this ICGN, and I saw 6 million volume a little farther back, and today, if you look at the pattern, it looks like a flag, and it's coiling.
Let's take a look. It's ICGN. This is a biopharma company. The low's 93 cents. The high is 710. I wouldn't be buying this baby.
Yeah, go all the way back to February 07.
Yeah. I mean, you get a gap here between 232 and 492, man.
It's huge.
Yeah. Just depends what day you want to fall out of bed, man.
Exactly.
Yeah. Let that come back, man.
Yeah, let it get down to 220.
Yeah. They lose 87 cents. You get 5 million shares float. So did they even have $5 million to lose? You know?
Yeah, you know, the problem you've got on this, Alex, is you've got, you know, some days the volume's 27,000 shares, 13,000 shares. You know, even after this big upthrust, these last, when it was started, June 28th, you know, this thing is trading 133,000 shares. Not a lot of liquidity out there.
Very thin.
Cooking, brother.
Let's go. Beautiful one to you.
Thanks, man. Have a great one. Have a safe one. Let's go to Dave in Boston. Hey, Dave, what's going on?
Good morning, gentlemen. Hey, what a great day. I got 2 stars for the price of 1. It's a beautiful thing.
Oh, baby.
We appreciate you listening, man.
Hey, Tom, I heard you talking earlier about shorting the 30-year. And as a rule, I tend to avoid options expiration. And then when you throw in earnings week, it's just too much deviance, as you like to put it. But what would be a good entry on TMV? Because I have traded that before.
Right here. We bought it this morning. Right here's the deal. The TMV, folks, okay, this is what it is. Well, what you have is this, okay? This is the direction 300% bear, okay? If you remember, I had got a call yesterday from Mass also, and I said, let it hit the ties first, have it reject it, which the bond market did, by the way, folks, okay? And the direction 300% inverse correlation here, it's set up just like the S&Ps we were talking earlier, Steve, when you had set those people up. And what it is that you have a high volume of $39. You're at 34.56, okay? You hit a 34.26 this morning. You can put a stop at 34.04. Give it nothing.
Absolutely.
You know.
And this thing ought to get to at least 37.97. You know, I mean, that's your, you know, that's where this thing is at least headed. Close up that gap.
And what you have, which is pretty cool, is this, Dave, is that when you mentioned even at the beginning the option expiration, bad time, you know, to basically put maybe some positions on, and I would agree that the volatility's there, and you're taking advantage of that though, because see the deviance inside markets, folks, kind of go like this, okay? And we have a traders market, and it's basically a wide price range. When you come down fast, right? Flips around, right? And as it flips around, you just need that correlation that, hey, okay, man, you know, as it flips around, the first thing that's going to happen is bonds are going to go south again.
Absolutely.
And
yeah.
you know, you only have to be in for a couple of days. I mean, you know, you're not even going to have a movie date with this one.
Right. So you think we're gonna run up the market right into expiration?
Which is only Friday. Yes, I do.
Right. Okay.
Yeah,
okay.
and I don't think it's going to get to the highs, by the way. But I think we get a couple-day pop, man.
Okay. And then, so the bond auctions don't scare you at all in the next 2 days?
No, no.
Okay.
Okay, man.
Excellent.
Have a great one.
Thanks a lot, guys.
Have a safe one.
We're sorry we didn't get to all the callers.
Yeah.
But we're going to be doing this again tomorrow.
At 10 o'clock. And you can, there's a rerun at 2 this afternoon.
Absolutely.
Man, it's a pleasure.
Yeah.
We're going to be growling and prowling with you folks. And give us some feedback, because we're going to bring this whole thing just like this.
And tune in to me at 12 noon today.
That's right, man.
Yeah.
And check out his newsletter. Have a great one, folks. Have a safe one. And always remember, whatever you think about, you bring about. Whatever you focus on grows. Visualize it, step in there, take ownership of it, and fly with it.
You got it, baby.
Okay.
Take care, guys.
Thanks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information